Hi, I'm Bill Moore, and I'm on a mission to bring alpha to your trading through the power of relative value analysis. If you're looking for more candlestick patterns, then you're going to have to look somewhere else. But if you are looking to start trading like a professional, stick around. Okay, so today we ran only one basket. It was the healthcare basket, the XLV components. And since we just ran the one, I didn't put any filters on, so there's quite a lot of things to look at. But by the time we add in a couple of filters, correlation and RW coefficient, there's still, what, about 50 potential pairs there. Let's add number of winners as a minimum. And that reduced it by about a third. And so let's go ahead and add some expectation value into this. And that makes it a much smaller list. Okay, so these are the guys that have good qualities as well as are in a position potentially to trade. Now, the first one on the list is the one we're going to look at. It has the least number of winners, which I think you know is unusual if you've been watching these things. But it's got some other nice qualities here. Well, one of the nice features is that the correlation is the highest of anything in the healthcare basket, the 0.977 number there, and the RW coefficient is also very, very strong. So it is Humana versus United Health, right? Obviously, they're clearly in the same business. So even though it only had three profitable returns to the mean, you can see that one of those is the one that's open currently, but there was a loser, a couple of years ago, right? So it's not got a perfect track record. Also, it's a fairly lengthy return to the mean time here, but I think it's a very safe play, and it is down at a point where you would expect some type of rebound here. So it's the kind of thing where perhaps we don't try to expect it to come all the way back up here. Let's look at it. I've already added it to the observe page. So it's not a perfect sine wave, but given the strong correlation and RW coefficient, it had to move back down yesterday. Let's take a closer look at that one. So it had to move down yesterday. I would think we should give it a look at, and if it starts moving down, to hold off. But if we start seeing it to come back up, then I think we jump right in and get into this immediately. Let's look at the hitting probabilities. A very strong mean reversion tendency. That's good. Let's put this on 10,000 for the iterations and run the model. And it's saying we're going to be above the current price, which is minus 36.12, 89% of the time. So that's a good number, right, in 30 days. The expectation value, 1.05, which is right in line with what we normally look for. It's saying that half the time we'll get back to the mean in 46 bars, and the mode being 23. As we discussed, though, we might not try to push it all the way back, given that picture that is not perfect. So let's make this the recommendation today. Let's go back and take one more look here. A good picture, not a great picture, a good picture, but it's in a spot where I think it is ready to trade. And amazing RW coefficient and correlation, very strong. It is HUM versus UNH. We're trading a ratio of 1.23. The backtest says that it has been profitable 3 times only. There's been one loser in there, but I think the safety of this one makes up for the fact that it hasn't been so quick to return to the mean in each case. So today's recommendation, HUM minus 1.23 of UNH. It is a long, so for every share of HUM that you buy, you're going to sell 1.23 shares of UNH. Good luck with your trading today.